Perfect. We'll crack on. So yeah, this webinar is all about mastering Xero. Xero is an amazing tool, but we think it's really, really important that clients get the most of it, especially as they, in recent years, have shown a fair amount of consistency in doing a price increase as well. So I think probably we've gone up way over 50% in the last 3 years. So and like I say, we still use it. There is options, and we do. Like I say, for us, we want to use a tool that you get value for money for. It is worth mentioning, like a few clients we're speaking to at the minute are saying it's unaffordable and they're not getting the value. Part of that will be to do with how they use it, but there is a good option called Free Agent, especially for NatWest customers. Anyone who banks from NatWest, RBS, or Metal. Yeah, it comes free with that banking app. If you don't bank with either of those guys, you will pay for it, and the cost is very much in line with Xero. So Xero, QuickBooks, Free Agent, all priced the same. But like I say, if you're willing to change your banks and to change the software, like I say, I'm just saying it to make people aware. I certainly, obviously, some two significant changes. But yeah, I think the key thing for us is if we can run sessions like this on how to get the best use out of Xero, then hopefully it's not a consideration. So the first thing we're going to look at is automating bank feeds and reconciliation. So some of this is going to be fairly obvious to some people, but like I say, hopefully if you bear with us throughout the webinar, you're going to get some things that you think are really valuable. So the first thing we're going to go over is just setting up a bank feed. Like I say, I mean, 90% of people who are using Xero are set up on the bank feeds, but some people might not be. So just starting with some of the obvious things. So like I said, there's plenty of ways to get to setting up a new bank, essentially. Probably the easiest way is, like I say, from the bank account screen, going to add a bank account. And like I say, I suppose one benefit doing this, so you just get the PowerPoint. Yeah. One of the benefits of doing this is, like, not everyone might have linked up things like their Amex and the credit cards. So I think when Xero first set it up, there was an amount of bank feeds, the main banks, and obviously that's expanded over time. I think there's still a couple of banks that aren't on there. But if you do have a bank account or a credit card, I'd say 9 times out of 99% of the time now we should be on there. So if you do have any like almost unusual accounts, let us know, because there might be a bridging piece of software which goes between the two, which will enable you to bring that information in. So if you are importing it or things like that, you wouldn't have to waste that time, essentially. So obviously you go from here, you'd be selecting the bank. I am on the demo here, so I'm not going to follow it through, but basically what it'll do is you'll go to the bank screen, and it'll essentially log you into NatWest and basically ask you the question, okay, you've logged into NatWest, so we know you're a NatWest customer. You've logged into Xero, we know you're a Xero customer. Are you happy for these two pieces of software to talk to each other? And like I say, obviously, as you're doing that process, the answer is going to be yes. And then that brings in the information. You might get asked every 3 months or so to restate the bank statements. It's the key thing is getting that done. Like, I think it'll give you a couple of weeks. So it's just saying, look, please, are we okay to reauthorize that link? If you just make sure you do that, then you'll never get to the point where the connection drops off, and then you wouldn't have to worry about the potential of having to, okay, dropped off for 3 days. What did I miss in those 3 days? And going back and pulling that information in, essentially. So that's getting the bank set up. Then the key thing with when it comes to using Xero and reconciling your bank is, the dream situation is you come on here and you have this green box option. So the more times that you can have those green boxes there saying, look, we know you've raised an invoice to this client, Ridgeway University, and we know that you have received a payment, or are we saying that this equals that? And obviously the answer there is yes. So the idea is, okay, things like invoices and purchases, they're going to be easy to match up, essentially. So what other transactions can we add that will, again, add that simplicity? So I was just having to scroll down then just to make sure that the example is here. So if you think Ridgeway Banking Corporation fee, so let's just assume this is your like a monthly bank fee. So is the bank going to send you a monthly invoice for bank fees? Probably not. And so sometimes, like, the ideal situation is you get an invoice to match everything to, because then you're tying it up and it's stored on your system. But things like bank fees, there's never going to be an invoice and there's no VAT. So the suggestion here would be to, if you know you're going to get that every month, the last thing you want to have to do is to type in this information every month. So one of the best things to do is create a bank rule. And so by just, like you say, you can go into this separately, but the best way to do it is create it directly from the transaction, because it's basically picking up the information for you. So because it's a bank transaction that's the same every time, you can say, okay, the payees, this is a rule, like you say, so basically what Xero is saying is, okay, if this rule is met, what do you want me to do? So the rule here is, if the payee is Ridgeway Bank Corporation and the description matches fee, so who's the contact going to be? So we know that it's always going to be Ridgeway Bank. Where do you want me to allocate this item? So the detail, because it's always useful to have the detail on Xero just in case you need to go back to it. The account, so Xero will typically have a bank fees account. Like you say, there is certain cases where you can say you can set bank rules up with the VAT amount on there. Certain like online subscriptions, for example, you just know that they don't actually physically send you an invoice. You sometimes have to go on there and access them and download them, essentially. Like I say, the preference when there is VAT involved is always to have it on there, add the receipt. But like I say, if you're having hundreds of these transactions a month or too much where there's no value in going on and getting them, then you can, like you say, set a bank rule up to pick them up. So then it's saying, okay, so every time it sees a transaction with fee in the name, it's going to go to bank fees, no VAT. And then, so the reference is basically saying what's the reference going to be. So you can either set it so you do it during the bank reconciliation, or like the easiest option is to just pick the reference. So pick the description, because we're saying that's what we want it to be every time it happens. So you could have, then you've got, okay, the rules in place. People who might have multiple bank accounts might say, okay, I want specific rules for specific accounts, but there's no harm in using it all if it applies across the board. And then, like you say, sometimes it's good to have a little bit more detail. So what we're saying is, because you might have numerous different Ridgeway. So, for example, if you had a loan from a bank and bank fees, by just calling it Ridgeway Banking Corporation, you're just having one set name, whilst this method allows you to create a few more, because equally you want to be able to review back to your bank fees and make sure you can explain them. So now what we're getting here is, it's basically saying we're getting this okay button down the middle. So it's we know those two match, we know those match, and so this is now okay. Again, that's obviously an existing bank rule that's set, but like I say, if I scroll down to next month's transaction, it comes up again, this Ridgeway. So that just shows that now, like I say, forever going forward, as long as they're charging you these bank fees, it's just saving you that little bit of time of thinking, oh, what is it, or where do I go to get that information? You can just quickly run through it that way. So again, this is all in aid of trying to speed up the process of the bank and the bookkeeping, essentially. And then again, Xero is continuing to evolving. We do actually have a little bit of steer with Xero now. We sit on like the Xero Practice Accountants Council. So if you do have any things that really do like stress you out, we can put that to in front of the people and say like, look, is this common? What can we do about it? And so one thing that people would have mentioned before about the bank feed was that it was quite it was very fixed. There was no way of changing it or filtering it. So if you look here now, what they've done is they've added a filter on there, so you can filter by start date or minimum or maximum amount, and then that will just help, like you say, find if you're looking for specific items. It just helps narrow it down a bit, but they've also added this search facility as well. So like I say, it is a product that is constantly evolving. So if you do have any feedback or anything that particularly stresses you out, then feel free to let us know. Didn't work very well. So getting back to the slides. So that's the bank feed side. I think that's all fairly straightforward. But just if anyone's got any questions on that, like I say, I'm pretty happy to take questions throughout. To be fair, I quite like these sessions to be interactive. So if anything comes up, should give me a shout out. I've got Tom here helping me with a second screen, so we can see any questions that pop up. But yeah, anything that does, just let me know, and I'll try and stop and jump onto it. So lock dates is really important. It's something that probably stresses out accountants more so than anyone else. Because well, first of all, how do we get to the lock dates? So you go on here, you go settings, advanced settings and financial settings. And here it basically allows you to lock Xero at a date. So the benefit of that is if you think like how we want to work, if you're looking at a set of accounts, so where are we now? We're coming up to the end of June, so you've already looked at May's figures and you've looked at your sales, your income, your profit and loss and stuff like that, and you've made changes or and everything like that to your business. So you'd come in here and you say, okay, we have completed the accounts to. So obviously shows how probably when this was created. So let me just get to the right date. So I'm having a bit of a problem with the mouse as well. So we've already reviewed May's figures, and like I said, we've made changes to the business off the back of that. So the last thing we want to do is someone who, like I say, if you've got someone in your accounts team or someone who's got some kind of access to Xero, to go and put information back into May. And it's the same like if you think when we're doing a year-end set of accounts and management accounts for our clients, like we want that cut-off to be really clear, because like I say, we're giving them advice off that, we're telling what the tax bill is off the back of that. But if they then suddenly go back into the previous month and put in a huge invoice, well, we've already looked at last month's numbers and haven't really factored into that. Then now we're looking at the current months. It's just really unclean. And then the bigger problem we have as accountants, which you guys don't have to worry about too much, but why we put so much emphasis on it is if we're doing a year-end set of accounts, we prepare a full set of accounts off the back of the numbers in Xero, and then all of a sudden we go back to look at it and it's completely changed, then a lot of our work has to be redone. So you'll notice we're extra cautious about the lock dates, but I do think for you guys as business owners, part of what we go into on this talk is sort of like looking at reports and stuff like that. If you are looking at reports, the last thing you want is someone to be going to previous months and making changes essentially. So yeah, that's why we talk about the lock dates and the importance of those. There it is. So another thing that we think is really useful is sort of recurring invoices and bills, and then setting up automated chasers and also segregating contacts. So take that one step by step. So the repeating bill invoices and bills are you can do from both sides. So it's more common from the invoice side. So when you're raising sales, so what you would do is set up a new repeating invoice. And so Xero is saying to here, okay, repeat this transaction every how many months? So like say if it's a monthly invoice, we're going to repeat it every month. The invoice date is going to be like say some people use the 26th, some people use the end of the month. So again, that just depends on your how you raise your invoicing essentially. Like I say, a lot of people will try and move it further in the month to try and allow them to collect that invoice within that month itself. So you're not waiting until after the month end to collect that cash. So you could say, look, that invoice is due in 3 days after invoice or whatever. You can set it to end. So if you know you've got a client there that you have signed to a 12-month contract, the last thing you want to do is raise them that invoice in the 13th month. So you can say, okay, this is a 12-month agreement we've got in place. So what we're going to do, we're going to set this to run until, well, I suppose you technically run it till the following May, with the first invoice being in June. And like you say, you set that to the 26th. Again, these are just going to have random people in there. It's just a demo account. And obviously, like I say, people do use the reference, people don't. I mean, we don't use it a whole lot, to be honest. We know use it more internal. And then it's the branding. So obviously, when it comes to setting up your invoicing, you can play around with the invoice and how it looks. So if anyone has never done that before and wanted a bit more information on that, then like I say, I can show you a bit more on how you can customize that invoice to how you want it to look essentially. And then like I say, the another thing that we're seeing more and more now is payment options. So again, this is you'll find this with the sort of webinars I run. I do jump around a little bit, but one thing that Xero have been putting a huge push on is new payment options. So can you just check 1 second? Make sure it's actually showing us the right screen it is. So yeah, there's things like PayPal, Stripe, Cresco, but also like a lot of the banks are linking with them now to be able to try and collect the money as quick as possible. And I think, like I say, so things like set up cards, set up bank payments, the more options you can offer individuals to pay your bills, the more chance you've got of getting paid. Like I say, obviously we sort of live in a world now where people want things done simple. They want things to be able to be done in 2 or 3 clicks. And so if you can manage the process, so where you're giving them like Stripe as a payment option or things like Go Cardless. So as clients of ours, you'll know we collect our invoices by Go Cardless. And like I say, it's not just for us as a business, because obviously it helps us because we get our cash in on time as per the payment terms, but it sort of helps out that you like customers as well, because some people, like for example, my nursery fees, I wish they just collected them by direct debit or standing order, because, and this is it's not even through the government link, it's just the food I have to pay for the little boys. But I just much prefer if they just collect that money, but it's just basically I just wait for it to build up for a month and then them start shouting at me. Then I pay at the end of the month. But like I said, I'd much prefer it just collected. So like I say, sort of jumped off topic a little bit, but that is a fairly significant change that Xero are trying to advance, because they know the stresses and pains that business owners going through but whilst trying to actually get paid. So anyway, you set this recurring invoice. like say so if it was, I don't know, like consultancy fee, for example, so you know it's going to be fairly fixed. So I don't know if you're doing it based on £400 a day or something like that. Or project management fee. And then what you do, you'd save that email down, save that invoice down, and it didn't work. Yep, that's because I haven't done this. So there's three options how you can have it. So you can have it to save as draft. So what it will do is every month you prepare it, it'll save it as a draft. You can save it for approved, so it'll be an approved invoice. So it'll sit in your an approved invoice sits in your sales. So you'll sit within your sales figures, but it won't have been sent to the client, and so they won't know about it. So it depends. I'd say unless you had a fixed process of saying, okay, at the end of each month you're gonna send that out. The third option is approved for sending. I suppose the approved one is nice if you've got a lot of contact with a client and you want to add that personal touch and attach it as a PDF to an email. The other option is, like you say, allowing Xero to do that, and it does, like I say, give you the option of editing that invoice, the email. So it's not like it doesn't have to just be a generic. You can change any of that to say exactly what you wanted. And then you can create specific like templates as well, just so you might have certain clients where you speak to them in one way, certain clients in another. I always see no harm in attaching the PDF. And then, like you say, you have the option of sending it to yourself as well. Just, I suppose that gives you that trigger to say, okay, I'm fairly comfortable now knowing that they've got it and I've seen the email. But for me, that would probably be just one too many emails. So yeah, that's repeating invoices. And then repeating bills is a similar process. Obviously, the bank rules that we talked about earlier probably would tick off a lot of the boxes for this, but this by creating repeating bills, it's going to give you something to reconcile against. So like we were talking about earlier, if you know that on the 30th at the end of each month you're going to get an invoice and the payment goes out the following month, then you're better creating a repeating bill for it to link to. So if you think of like a phone bill for an example, because if you getting a bit technical, but if you reconcile that transaction when it's paid, say the 5th of the month, then that cost is going to sit in that month, and then you're going to recover the VAT in that month. But if you're like say paying for a phone bill, comes out at the 31st of the month, so it's phone transactions during that month, you'd be better creating a repeating bill for the fixed amount. So the invoice sits in the right month, the cost sits in the right month, and so does the VAT, as opposed to linking it direct to the payment. So this would be the preferred route, like I was saying earlier, for VAT transactions. Another good use case is, I don't know if anyone's got electric cars, but with electric cars, you can only recover half of the VAT, and Xero doesn't really allow you to set a 10% VAT rate essentially. So what we would typically do is, you would say like you'd have 50% of the car quantity. Say if it was, I don't know, £300 a month, you're releasing a car. So one almost get around is saying, okay, I'm going to charge 50% on that element. On this element, I'm going to charge, I'm going to zero rate it. I'm going to charge no VAT. And so that by doing it that way, it basically allows it to recover only half of the VAT, and you don't have to do this adjustment every month. So again, it's a little bit niche, but probably a good time where we've sort of seen that in action. And the next one we had there is automated chasers. So again, this is with Xero, they do have an invoice reminders. So basically what this is doing is you want to email customers when an invoice is and you can completely edit this. So you set how many days it's overdue by, and you set the actual type of email that you send. So again, the placeholders are here. So for example, if you want to say, if you called these people by their full names, it'll be first name, last name. So it's got the full name on there. So yeah, this is a really useful tool as long as you are using Xero all the time. Because if you think about it, if you're a person, like I say, we're now, what we would highly recommend is reconciling Xero every day. So jumping on in the morning, reconciling the transactions, then cracking on with your day, because your Xero then is fully up to date, and you can go on your accounts, run a profit and loss, and see exactly how you're performing there and then, without having to think, oh, I'm going to wait to end the month, do it all in one, worry about some receipts that you lost, worry about some invoices you've got to chase. So yeah, so we're really pushing like daily bookkeeping, like I say, maximum weekly, because the problem would come if you're going to do your bookkeeping once a month, and someone's paid you, but you're using this email chasing function, and then they'll come back to you and say, no, we've already paid you, and then they might get a second chase saying, oh, you're chasing us for payment again when we've already paid you, because you're only doing it monthly. So again, it is a great tool, because like you say, I do find a lot of people aren't avoiding payment because they can't afford it. A lot of it is timing, and like I say, people are easily distracted. So they're going from thinking, okay, I've got to do that transaction, to something else popping up, and they end up not making the payment. But by, like you say, you just sending these friendly reminders or aggressive reminders, depending on how you want to play it, then like you say, you're there, you're chasing them. And it's not costing you any time. And then your process might be, okay, when it comes to a month out of date, then it should be popping up on so like here, so these are people who owe this company. Let's get last month, just not tied everything up. So like say City Limousines as a client of this company, well, it's gone past this month, and then so the reminders might do the job for that first month and collecting X% of the invoices due, and then anything after a month, well, your process then is to pick up the phone to them, and your process after 2, 3, or 4 months might be going down the legal route. But again, it's almost telling yourself, this is my process. So like I say, the invoice reminder is a great tool to use, but the only way it works is, one, getting your bookkeeping up to date, and two, setting a process and a system that you're fairly comfortable with. And so the last one we had on this section was contacts. So essentially, one thing that is fairly new to Xero is groups. So an example that we use, what we see we see clients using quite a lot, mainly from spending, like money outgoing, is you can set up groups like direct debit. So so what you do here, you go to your bank and you'd say, okay, I have some payments I make by direct debit. So yeah, let's just have a quick look. So these are all the payments that are due to be made, as an example. And we could say, okay, Xero is a good example. We know that generally speaking, that's going to be taken by direct debit. So we go here, we search Xero, and we add that to the group direct debit. So the next time you're going on here, obviously the example doesn't quite work because it clearly hasn't been paid in this example. So let's assume the direct debit failed. You can then sorry. So group by contact group. Date. And so here, what you'll see is, so you're coming on here thinking, okay, what have I got to pay? What's due for payment? And well, these are the ones I'm going to focus on paying because I know that these ones are covered by direct debit. So it just helps and it can avoid those duplicate payments as well, because you might log on to your Xero at one point and think, oh, I've got to pay my gas and electric, or say someone new to the business who's coming in to support you. So it just makes it a lot cleaner because you can say, okay, well, anything that's direct debit, you don't touch because we know that that's going to be collected by payment from that method. Everything else, you need to factor into your payment run. So you might, this is the best place where you would come to say, okay, I'm going to do a payment run this month. What do I owe? And like you say, the ones that are, like I say, being a demo account, just looks a little bit messy, but you would be looking, saying, making sure nothing's gone over 1 month, just to make sure you're on top of the payment side of things. So yeah, that you get to that by going to the contacts. Other ways of grouping it. So people might have different arms to their business. So for example, on this one, they've got this is set up to have different tracking categories, for example. So you might have a north, east, south, and west element to the business, and you might have project managers covering each site, or you might be a business that's, like say, based in Sheffield but has 2 or 3 different revenue streams, and one person is responsible for one revenue stream and the other is responsible for another. So by being able to group them, you can say, okay, look, this is your debt list, you deal with that. This is your debt list, you deal with that. And like I say, it can help with accelerating and getting that money in, essentially. Realising I'm talking fairly quick, so I think there's quite a few bits to get through. But has anyone got any questions? Has anyone got any questions so far? Anything that they're doing slightly differently, or anything they wanted? Any tips on that before we move on to the tracking side? Shout up, I don't know. So yeah, so tracking categories. So I mentioned that earlier. So essentially, to what you can do, you can go in settings, advanced settings, and tracking is here. I suppose whilst we're looking at this, one thing you can do is any reports that you are using quite frequently, if you star them, so anything you star will be shown here. So that goes for accounting reports, but also these are setting-based reports and stuff like that. So these have gone regional. Obviously, from working with us and Gravitate, we're broken down into squads. So every person who is a client of Gravitate will work with one of our squads. So you'll either be working with Dan or Jonathan and Aaron, or Mike and Charlotte, or Josh or Tom South. And so what we do for us and for them is we report on our numbers based on those squads, and so it's great for us to say to the team, look, this is how your sales are looking, this is how the costs are looking. So you can apply tracking categories at every level. So you can do it on income, expenses, journals, so everything you can do. Sometimes it creates a bit of work, but it allows us to give our teams really good data on how each area is performing. So you could do something similar with your businesses, whether you break it down by sites or whether you break it down by the person responsible. This is broken down in regions, and so essentially I haven't actually tested this out, so I'm not sure how it's going to look, because they might not have done any tracking category work. But then you run your profit and loss like normal, and you go compare region. I assume some will be allocated and loads won't. So we can see here that they're obviously just really focusing. Oh, they've got some costs as well. So we're saying that, like I say, east side, or in this year to date, so this was essentially 3 or 4 months of this financial year, east side is the worst performing. South is second, north, and then like I say, west coast is really performing. But obviously, what would be better to have all the cost of sales. So what we do on our Xero, so on our Xero. So our cost of sales are staff costs, subscription costs, and things like that. And so we also split them across. So it's one thing saying, okay, they're doing well on the sales side, but like I say, they could be, well, if you take the South, for example, they could be invoicing 2,800, but their cost could be the full 2,900. So they're doing lots of work, but they're suffering all the costs and actually not making any profit. So yeah. So again, whether you go all the way to this level, because if you think, like, if you took rent as an example, how are you going to split that across those 4 groups? At the minute, you'd have to do it fairly manual way. So you'd almost take the cost out and split it out. But if you could do it accurately, so for example, I'm almost thinking if that was a central head office rent as an example. But so there's ways of doing it, there's ways of cutting up the data, but I think the key areas to have it are the sales and the cost of sales. If you do have clear different areas that you want to be able to track and focus on. So we've got a question. So is this doable in between separate businesses / Xero accounts? So we're saying the tracking categories, is this doable across 2 Xeros? Let me pick that up with you. I just need to understand what you're trying to achieve from that. But as well, let me think. So you've got 2 different sites, and you're trying to have the tracking categories. So do you want the same tracking categories in both sites, or are you thinking because what the one way you could do is, so yeah, the question is this possible across multiple Xeros? So I suppose the example would be making sure it's consistent, because you might end up having to consolidate the account. So one thing you can do is so we work with account softwares like there's one called Sift and there's one called Fathom. We use Fathom predominantly, but Sift is becoming a big player as well. And what that allows you to do is get multiple Xero accounts and feed into one to produce one report. So, for example, our corporate finance department is becoming its own company. So corporate finance will become a separate arm of Gravitate. But when we're looking at how the company performs, we will sort of combine it into one group position. So that's an example of how it works. Yeah, I'll pick up with you separate, Han, on that, and then we can sort it. So where I get to, that's tracking categories. Like I say, again, really useful tool for of how you can use it. There's probably more. And if you're someone who's thinking, oh, this is actually something I desperately want to do, how can I action this? Because I've got loads and loads of data. So one thing you can do is you can go accounting and go to the tool called Find and Recode. I think if anyone else tries to click on it, it sort of it does come up with a big warning and say, only do this if you know what you're doing, because you can make quite drastic changes to your Xero by playing around with this. So, like I said, if it's just tracking categories, feel free to use it. If you're unsure of anything you're doing, just give us a shout. So what I'm looking at here is, so Find and Recode allows you to find a load of transactions based on what you're looking for, and then recode it to something different. So let's go sale. So you go what I'm looking for. Oops. Account. So I'm looking at how, because when we went to that report, you saw that there's a load of sales were allocated to a tracking category. So you can see here, all these are unallocated, and that's just from this month. So for example, I could say, well, Bayside Club. So I went contact. So it is in our sales nominal, and it's a base side club cost, such that none of them are being allocated. So I can say, okay, I want to recode. So I'm saying I want to recode all those. It gives you the choice. Do you want to do it by journal or the transaction? So journal will say, okay, I'm going to journal these out of this code and put it into a different one. Source transaction is saying I'm just going to change the original input. So generally speaking, you're fine to use the source the transaction itself, unless you're playing around with stuff like dates and stuff like that, which I wouldn't recommend. So what we're saying is, okay, we've found all the sales that relate to Bayside Club, and we know Bayside sounds like it could be on the coast somewhere. So let's say West Coast. So it's basically saying, okay, you've decided to recode those two transactions. It's done. And obviously that's two transactions, but people are doing this on mass. So like I say, you could have thousands of transactions and you can backdate it. It's a great question. Can you recode items prior to a lot date? And the answer is no. I think it does actually come up with the warning. So that's why I think I've come onto the same search. So it says here, look, transactions are locked prior to the 31st of May. So that's basically saying you can't go back and change prior. But if you're someone who knows what you're doing and you're doing things like I say that example we've just done, it's not changing lots. It's more just changing historic information. So if you're like, oh, I love this idea of using tracking, but if I do this year's versus last year's comparisons now, last year's is all unallocated and this year's isn't, you can take your lot date off, go and change the element, and then, like I say, stick the lot date back on. Always stick the lot date back on, and then you can update all that information essentially. So yeah, I think Find and Recode is a great tool. So another example would be so one thing that I go on to next is the chart of accounts. This is what on my Xero always looks like. By the way, I've always got 100 tabs because so yeah, it is. I don't know if anyone uses it, but if you hold Control when you click on anything, so if I go like Control Dashboard, it will open up in a separate tab. And the benefit doing that is, well, I mean, this is probably getting a bit too many, but like I say, if you wanted to flick between things, like so there, ignoring that one, I want to go between chart of accounts and here, I can like see what other items are in my chart of accounts. And like I say, one of the next section is on about the chart of accounts essentially. But I'm going to just spot the time, so I'm going to speed up a little bit. So what I'm getting at here is chart of accounts is really important. So if you, going back to what we were talking about earlier, if you have loads of different types of sales, then having everything stuck in one sales nominal, it's not very good practice, because this is your chart of accounts. This is how you can make decisions. So what we'd highly recommend is having loads of different, all your different like revenue lines listed out. So again, it's easy always for me to talk about Gravitate. So we would have year-end accounts, management accounts, tax, and we probably have 30 different sales lines that we're using all the time with all our services on, because then we can break out and we can just do it. It's sort of like the best thing about Xero is the more information you put in, the more you can get out. And so if you think about how we're doing that, so if you've got management accounts, VAT, year-end accounts, as nominal codes, which these are essentially are, and then we've got going down on the squads, we've got all this data to say how our sales information is performing. And like I say, I always say the more information that you're adding to those invoices at the start, and the more you're breaking it down, if you ever needed to do the analysis work, you either do it in Xero or you can export it out of Xero and put it in an Excel and play around with it. So I sort of did this earlier, it wasn't already on there. So what I'd just go on here, you go add a new account. So generally what I would always do, so if we're going to add another sales account here, so let's say it's going to be sales. Code is going to be 202 because you just want it to run in line. And then we're going to say, obviously, that sales invoice we created, that recurring one we created, we're like, okay, we're starting doing consultancy work now. So let's get a new nominal for that and let's track it. And so again, the more information you can put in, so then you've got these 3 different sales options. And then if I go back to find a recode, using the example we we're just talking about, in fact, I'm going to a box open here, but I'm just going to quickly take off those lock dates because I want to lead into something we're doing in a bit. So again, you can just take them off, or you can move the date back a little bit, whichever is your preference. So I'm going back in here, I'll just research again, and obviously now it's pulling up all the historical stuff because we took the lock dates off. That's all locked. Okay, that must have updated. And so what I'm looking for is so I've set up in my chart of accounts 201 project management. So what I'm saying is I can go through now and say that's project management invoice. That's project management. That's project management. Project management. Unfortunately, you can't search by thing, but you get the point. And then what I'm going to redo is recode those. So I'm happy the contact's right. That's the right contact. What I'm not happy with is the code because it's just gone into a generic sales code. I don't know what that didn't do, to be honest. So what that's now done is if I go to accounting, profit and loss, then you can see I've got that sales line broken down. So like you say, we literally have 30 of these, and again, it's just on the basis that we don't look at them all like that. We're not like, oh wow, looking at every granular line, but it just allows us to cut that information up as and when we need it further down the line. So yeah, that is all the stuff on tracking categories. If there is questions, fire them away, but I'm just going to keep moving because we're going to run out of time. So yeah, I mentioned setting up the chart of accounts, and like I say, we have. So this is a pretty much standard Xero. What I would typically see added are things like if you want more detail on advertising and marketing, you could have that based on different areas. With the sort of the more direct costs, so it's useful if you've got a lot of staff. That again, go back to Gravitate, where we've got our accountants are a cost of sale to us. So again, going back to the P&L, I would want the accountant salaries sat in here as a cost of sale, and then our central team, so like our marketing team, our client onboarding team, they're not a cost of sale. They're not directly linked to sales, and so therefore I'd want them as an expense where a lot of the salaries typically sits, which is down here. So again, creating codes to enable you to break those out is a good use case. But when you first load up Xero, this is what a P&L would look like. But what I've done, so what we highly recommend is changing that layout to something that suits you. So for example, here at the minute, we've got corporation tax sat as an administrative expense. So what we recommend is bringing that down here because that's sat down below the line. Things like dividends as well wouldn't technically be sat there all the time. But also making sure your gross profit is accurate. So if you use consultants as an example to service your work, you could drop that up there. Let's say there's 2 different takes on what a consultant is. So is it like do you have a consultant who advises on your business, or do you use consultants to look after your clients? So that's what you can do, and then you basically update the layout. I've already sort of pre-saved this here. So as an example, what I would end up with something like is I've done so many months. But yeah, so what I've done is, so we've got sales and cost of sales. So like I say, what the cost of sales is like you say, the cost of delivering a piece of work. So that tends to be purchases, staff costs, or any direct cost linked to that, like certain subscriptions and stuff like that, which gives you your gross profit. And then a metric to keep an eye on is, okay, what is your gross profit margin? So you're looking at out of your sales value, how much are you converting into gross profit? Then you've got your admin expenses, so the central cost of running the business. And then you've got like sort of an operating profit slash, some people refer to it as EBITDA. So EBITDA is earnings before interest, tax, depreciation, and amortization. So like I say, it's a word you'll probably hear all the time. EBITDA, and you don't really need to know much about it, but it's basically saying, okay, I want to know what my earnings are before any interest payments, but there's no interest here. So if you've got like interest on loans and things like that, then EBITDA is the number before that. Then tax, and then depreciation. Obviously, we've got that sat down here. And amortization is similar to depreciation. It's just a way of writing down a cost of, well, depreciation is a physical asset like a computer or a machine, and amortization is an intangible, so something you can't physically hold, an asset you can't hold. So it tends to be like brands or websites or patents and stuff like that. So that's the small difference between the two. So yeah, how we set up a chart of accounts is pretty important. Like I say, that's how you are able to see the EBITDA. And then, like you said, one thing that is a useful exercise to do is start putting an estimate in there for your corporation tax. So what you would be doing there, you'll be saying, okay, I mean, we can give you a template if you'd be interested in taking it to the next level, but you could say, okay, roughly I know my tax is going to be at 25%, or roughly I know my tax is going to be at 19%. So if you took this as an example, you'd go to accounting and you'd go to manual journals. And so what I've just done some really rough numbers earlier. Basically what that's saying is, so let's make it slightly more accurate. Okay, so we know our profit for the month is £6,700. So we're going to take 6,783, and we're going to assume we're going to start paying tax at the high rate, which is the 25%. So what I'm going to do is edit that journal and make it 25% of that number, which is 1696. 1696. Where's that? And I must be somewhere. Here it is. And then so what I'm doing there is saying, okay, my company's made that profit of 6,700, but I know I'm gonna have to pay corporation tax on that at 1696. And so what I'm doing is I'm saying, okay, well, after I've paid that, then what's next to come off? There's dividends, because dividends aren't an allowable cost for the business. So this is the general format, how you'll see it in a statutory set of accounts. But that's why it's important to look at it like this, because if the £500 was up here, this £500, then we'd think, oh, we get corporation tax relief on that as well. So the profit is higher or lower. So yeah, so the corporation tax is based on that number, and then you've got £500. And what that journal's doing then, if you then went to the balance sheet, it's building up this provision for corporation tax. So every time we're adding numbers to that journal, it's basically saying, okay, that's a creditor, so that's someone we owe money to, and in this case it's HMRC. There was a question: is there a way to have subcategories in the chart of accounts, example, to say repair spending per different department, or would you create new codes? Trying to think of that quickly. So is there a way of having? There is a way to have subcategories, yeah. So when you go into the edit layout, like you can group certain items together. So it says here you can group selections. So that's what I would be doing, play around with that, and like you say, grouping them up. So you could have like really granular, like you might have motor as a cost, but then within that you've got mileage, car repairs, travel, blah blah blah. And so you would have 3 or 4 codes in the detailed view, but then group them together when you're reporting to certain people who don't need to see the granular level. So hopefully that was what you were thinking. So that's the chart of accounts. We've just been through all that and setting up to know your profit before tax. Mentioned that, and also storing the reports. So the very last thing, sorry if anyone's got a hard deadline, is budgets. So again, not sure how many people use the budget manager. So budgets are fairly important. Like I say, for owner managed businesses, you don't really have much to hold you accountable against. So, but at least if you set yourself a budget, you say, look, this is what we want to achieve. And whether you're a one-man band who's doing a little bit of work, who's doing some work with 1 or 2 clients, or you're a 10-man company, 50, 100-person company, like budgets are important. So like I say, if you're this one-man band who's doing a little bit of work here, there, for different sales categories, you could say, okay, well, I want to set myself a target of delivering 1 grand of sales per month to start with, but then I want that to increase 5% month on month. And so coming to the budget manager, it's not overly optimized there. What that's going to do is that's going to put those budgeted sales in there for you. Then you go like the project management stuff. And so this is sort of the real quick and easy way of setting yourself some targets. So you'd go, okay, well, this is a new line of business, so and we can only deliver X amount of it. So let's just set ourselves the target of doing, I don't know, £500, but just for that just to stay at £500, because, like I say, that's a different line of work. It's not going to grow, typically. But you can use that budget manager to go all the way through your costs. So, like if you work down to conversion tax is probably a bad example, but light, heat, and power. Well, it looks like largely based on the data you've got so far, it's going to remain fairly consistent. So you can go through this whole process of setting up a budget basically fairly quickly in here. And then what you get to the point of doing is, again, go back to that profit and loss. You get to the end of that month, and when we're talking about, like, say, checking how you're performing, and you can do like a budget variance as an example. Obviously, this has got very limited data in, but it's saying, okay, we said in June we were going to do £7,000, we've done 5,800, but you can then talk yourself and say, okay, what sale didn't we have that we thought we were going to have, or what have we missed out on, essentially. I appreciate absolutely flowing through budgets there. So I suppose it's just raising awareness that the budgets are there. And like I say, obviously everyone's got like client FDs or contacts within Gravitate they can talk to. I am also pretty contactable. My webinar is going on. I think the last slide was just saying thank you, Anna. So again, a little bit sped up at the end. Let me see if I missed any. I did all the questions. Is there any more questions? I know I've got time if people want to fire any more questions at me. If any people have got any recommendations on other webinars that they'd find really useful, let me know. If that was good or rubbish, I'm happy to receive feedback. Like I say, we're just trying to offer more support, and I say it's really hard for us to try and this is a good format, and like I say, obviously good format for us to try and reach all our client base in one. We're trying to do more. We've got a few new things coming this next few months, so we're trying to, at the minute, our newsletter's fairly informative. We're trying to create a newsletter, a more advice-led newsletter, and that's going to go out every month, so keep an eye out for that. But yeah, any questions? let me know. I'll hang around for a couple more minutes. If not, thank you very much, everyone who attended.